Hello friends, let's begin with November 16 examination paper. Before starting this paper, let me be very frank with you. Although this paper was of 3 hours, I will complete this paper in approximately 4 hours. The reason is I need to explain some nitty-gritties of some questions. I need to cover every question and I will not have any choice like you have in your examination. So I will try to cover each and every aspect, even concepts, why, what was the reason of using this formula, etc. And I hope you will enjoy this video solution like you enjoyed earlier video solutions. Let's begin with November 16 solutions. Let us come on to question number 1 and see what question number 1 is all about. See, this question was a question from May. This question was question from May 14. The exactly word to word same question was asked in May 14. Question 6A was the question. Let's see what this question is all about. And this is not just a recent question, rather I think it was in 2005 May when this question was asked in a detailed manner. Here it was asked in a very concise manner, but this question was asked in very detailed manner in I think May 2005. Let's see what this question is all about. Question says, question 1, X Limited is a manufacturer of cardboard boxes. An analysis of its operating income between 2014 and 2015 shows the following. आपको analysis दिया है. What kind of analysis is it? See, income statement has been provided for 2014 and same way income statement has been provided for 2015. Now, you have been provided 3 ways by which they have found the difference in income. What I mean to say is, why this income in 2014 was 10,80,000 and how come it changed to 14,42,000 in 2015? That's the main question. So we have analyzed it in 3 manners. Question has already given this analysis. First one is growth component, second one is price recovery component, and third one is productivity component. The main thing to be noted here is productivity. What is productivity all about? If you remember our classes, productivity means change in output due to our efficiency, etc. So this is productivity. What is price recovery? Change in selling price or cost price, whatever it is, and reason of such changes means effect of such changes in revenue, cost or profit. Now here question says X Limited sold 4 lakh boxes and 4,20,000 boxes in 2014 and 2015 respectively. Means 20,000 extra boxes has been sold in 2015. During 2015, the market for cardboard boxes grew 3% in terms of number of units, and all the changes are due to company's differentiation strategy and productivity. Means what it says is market size is the main thing. Means let us think in this way, 4 lakh into 3%, which comes to 12,000. This is out of 20,000, 12,000 denotes to market size. The difference of 12,000 is created due to market size, and for remaining 8,000 it is saying all other changes due to company's differentiation strategy and productivity. Got it? Differentiation strategy means how come our product is different from the products of other competitors, and productivity. Okay. Required, compute how much of the change in operating income from 2014 to 2015 is due to industry's market size factor. Means now we need to calculate that these changes, how much of these changes shall be attributed to market size productivity and product differentiation. Okay, we are aware that productivity is nowhere related to market size. So let us keep apart productivity. Same goes for price recovery component. Reason is it is selling price and cost price, change in selling price and cost price. So in simple terms, in nutshell, we can say that only growth component can be segregated into two parts. One is market size and other is market share. Let us see how come. What is market share? Market share is market size is all we know that in case industry increases, industry sales increases, our sales automatically increases. But what is market size? Market size means our products were having something different in comparison to other competitors, means product differentiation. Because of this differentiation, sales of our products increased or decreased, whatever it happened, but it changed. That is differentiation strategy. So in a nutshell, we are supposed to calculate, yes, let us come on to answer very fast. We are coming to question 1A. One thing you noted down is I read the question very slowly. I was nowhere hurrying in reading the question. Reason was, question is something which we need to comprehend very clearly. If we have a command on question, solution is a 2-minute job. Let's see what question is all about. See. Additional sales of boxes in year 2015, 20,000. How come? 4.2 lakh minus 4 lakh. Now we segregate this 20,000 into two parts. Market, let us take first size. Market size variance and rather use the word effect because you are using units right now. So it will be better if you use word effect. And market share effect. This is 3% of 4 lakh is equal to 12,000 boxes, and remaining 8,000 boxes shall be attributed towards market share effect. Now, first effect was of growth component. Amount provided to us for growth component was rupees 1,40,000. Rupees 1,40,000. Let us differentiate it into market size and product differentiation. 1,40,000 into 12,000 upon 20,000 means favorable variance of 84,000 shall be attributed towards market size, and balancing figure is product differentiation or market share, whatever you want to say. Fine. Next effect was of price recovery. Now price recovery is 1,64,000 and it has nowhere linked towards increase or decrease in size of market. Last is cost effect of productivity component, which is 58,000 Second thing which was asked from us was to reconcile both years' profit. Let us reconcile. Operating income in year 2014 was 10,80,000. We will adjust industry market size variance 84,000, means all 3-4 variances which we have calculated already, we have calculated. We need to just write them down. Then it is product differentiation 2,20,000, and then productivity. Just a second. Let me write it again. Total comes on to 14,42,000, which is of course operating income in year 2015. Very simple question. Let us come on to Question number 1B. Without wasting any more minute, let us come on to question number 1B. In case you want to write it down, because we don't have this much amount of time like in class, that I will let you write down whatever I've written. I would suggest you to either pause the video, or you can do alternatively, you can download these slides. I will make them available to you, and you can write them on your own at a later stage. Fine, because this is video solution of examination paper. We need to have some good pace. Although I am very slow right now, I am going to increase my pace gradually, but we need to have some good pace so that our paper shall look like examination paper only. It shall not happen that we complete our this November 15 paper in 5 hours or 10 hours. Let us come on to question 1B. Some statements are given below. Okay. Identify name of the cost with examples and state whether it is relevant or non-relevant in the decision making. Oh wow, what a wonderful question. Very simple. Let us see. Cost are historical cost which have already been incurred and cannot be changed by any decision made in future. Of course, this is sunk cost, hence irrelevant. No need to write it in separate. You are supposed to write it in exam in your answer sheet, but I am just explaining it here only. So, cost which are historical costs are obviously sunk cost. Second point, it is measure of benefits foregone by rejecting the second best alternative of resources in favor of the best. Means आपने कुछ किया, you did something and because of which you forgot something else. The benefit foregone is opportunity cost. Now obviously it is relevant. This is known as what? Opportunity cost, and this is again what? Relevant. Third one, it is portioning of cost which includes payments to outsider, that is, it gives rise to cash expenditure as opposed to such cost as depreciation. Means you are saying something is going out of your pocket, some cash flow is being done, so you will say it, you will state it as out of pocket or cash flow, cash outflow, and obviously it is relevant because it is clearly mentioning that we are making some payment to outsider. Fourth point, total cost is change, increase or decrease due to change in level of activity, okay, technology or production process or method of production. Okay, means your total cost is changing. Differential cost, agreed, because if it would have been only increased, then it would have been known as incremental cost, but here it is clearly mentioning that it can be increased or decreased, so it is known as differential cost, and differential cost is obviously relevant for your examination. Last point, cost used in evaluation of a product to reflect the use of resources, but that has no observable cost. Okay, that means it is notional cost. For example, while calculating national income, if you remember our class sessions, you must remember that I don't know whether I used this example or not, but let me give you an example. India's national income is being calculated. So what usually happens is, let us say we take income of housewives as well in calculation of that national income. Now question is whether it is actual income. You will say no sir, they are earning but they are basically saving. Or you can say that what government is doing, they are notionally adding something, it is notionally adding something to national income. Let me take another example. I don't know that example of national income is correct or not, because I don't know how economic works. Let us say a headquarter adds some rent to branch expenditure of each branch. It is not actual rent. Just for the purpose of calculation of cost, it is adding that rent. So you will say, sir, that cost is not actual cost, that's why it is known as notional cost, hence it is irrelevant. Got it? Notional cost is irrelevant. Some people say, no sir, notional cost is relevant. It can only be relevant if we compare it, we take it as, not compare it, we take it as opportunity cost. Means, let us say, because of some reasons we have added, and let us say we are going to follow another option. In that, if we follow that option, means we are comparing in such a manner that if we follow that option, the other cost can be, means something like that, means in which we are showing it as opportunity lost. In that situation only we can take it as relevant, otherwise in majorly all cases we are supposed to take it as irrelevant. So don't get confused, it shall be treated as irrelevant. Let me come to question 1C. Very simple question, ditto same question of question 21 of decision making part 2 of your 11th edition book, exactly word to word same question. Let us read it. See, how come I know? Reason is shutdown point. I already know everything, because I can definitely just visualize and I can understand that this question belongs to which particular question of my book. So it's very easy for me. Anyhow, let's come on to this question. Question says G Limited produces and sells 95,000 units of X in a year at its 80% production capacity. Okay, the selling price of the product is ₹8. Right now we are producing 95,000 units at 80 and utilizing 80% capacity. Our selling price, currently selling price is ₹8. Variable cost is 75% of selling price, means ₹6. Contribution per unit means is ₹2. The fixed cost is ₹3,50,000. Okay. The company is continuously incurring losses. And management plans to shut down the plant. Because company was incurring losses, management thought about shutting it down. The fixed cost is expected to be reduced to ₹1,30,000. Now, currently our fixed cost is ₹3,50,000 and we are planning to reduce it to ₹1,30,000, means we are planning to reduce it by ₹2,20,000. Additional cost of plant shutdown are expected to be 15,000, means special shutdown cost is 15,000. Should the plant be shut down? Find the shutdown point in units and also in percentage of capacity level of production. Got it? Very simple question. Let us come on to solution part. First part was whether the plant should be shut down or not. So let us make two columns. If operations are continued, and second one is if plant is shut down. We have been told that in case we continue our production, we will produce 95,000 units. Our selling price will be ₹8. Obviously, there will be no selling price if we don't continue, means if we shut it down. Our variable cost per unit will be 6. How come? You know, 75% of it. By right, I mean to say you need not show it in the exam. So contribution per unit comes to, real name of contribution is contribution per unit, contribution margin. Your total contribution will become 1,90,000. Let us say we subtract fixed cost from it so as to arrive at profit. You have been told that if we continue the plant, our fixed cost will be 3,50,000. If we discontinue, means shut it down, it will be 1,30,000. Fine. One more cost has been provided to you. Shutdown cost. Yes, exactly. Shutdown cost of rupees 15,000. So is it a profit situation or a loss? You will say, sir, our profit is negative 1,60,000. It means it's a loss in situation 1, and in situation 2 it is negative 1,45,000. Obviously you will say, hence it is advisable to shut down, because in such situation our loss will be lesser, rather fewer, in comparison to in a situation when we continue our business. Let me come on to part B. In it we were supposed to calculate shutdown point both in units and in capacity. Let me assume that at shutdown point our units of production will be X, means it will be an indifferent point wherein our losses will be same whether we continue our business or we discontinue our business, our losses will be same. So we want to know how many units shall be produced to arrive at that particular indifferent point. Got it? Let's see. Let units sold on continuing business is equal to X. At indifference point, that is shutdown point. What will be the situation? You will say 2x minus 3,50,000. How come 2x? You know 2 is your, what is 2? Contribution per unit. We have used units as X. So it will be total units will be 2x. Our fixed cost is 3,50,000. So this will be our profit in case we continue our business. And in case we discontinue our business, we already know that our profit will be negative 1,45,000. Therefore, value of X will be, means if we produce 1,02,500 units, then we can comfortably say that our situation will be no profit, no loss, because in both the situation we will be earning same loss, same amount of loss. Fine. We are aware, now let us calculate this shutdown point in capacity. We are aware that 80%, at 80% capacity, our production was given as 95,000. Obviously, if we calculate 100%, you will say in such situation 95,000 divided by 80%, which arrives at 118,750. See, 95,000 was 80%. 100% comes to 1,18,750. We need to know about 102,500. Means shut down point. So it's very simple, 86.32%. I have a predetermined value because this question is very old, so you can calculate it on your own very easily. How come I calculated it? Let me show you. Just a second. Okay, 100% upon 118,750 into 102,500. Got it? Let us come on to question number 1D. See, I told you it's a very simple question. It was a very simple question. Now let's come on to question 1D. This question is again word to word same as question 8 of learning curve of my 11th edition book. Ditto, word to word same. You can cross verify. Question 8, word to word. Let me read it for you. A company which has developed a new machine has observed that the time taken to manufacture the first machine is 600 hours. To manufacture first machine you require 600 hours required. Calculate the time which company will take to manufacture the second machine if actual learning rate is 80% first situation and if actual learning rate is 90%. Explain which of the two learning rates will show faster learning, and you are also supposed to tell that out of this 80% and 90% which will show faster learning. Let us come on to solution of this question. Let's see. Second part, what I'm saying second, it's D question, sorry. First part, let's make some headings. Incremental machines, first machine, then second machine. Total machines, cumulative average time per machine, total time, and last incremental time. These will be our headings. First, let us say now make two columns, two headings out of within these headings, subheadings. First one will be learning curve analysis at 80%. Learning curve analysis at 80%, and second we will make at 90% obviously. First machine, additional machine. First machine, total 2 machines. Got it? First machine 600 hours. What does learning curve theory suggest? Whenever our output doubles, our cumulative average time per unit gets multiplied by our learning rate. So our learning rate is here 80%. So obviously you will say 600 into 80%, what will be the figure? It will be 480. Okay. So total time is, for first machine it is 600. If I am saying that average time is 480 for 2 machines, so total times comes on to 960. Obviously because average time is 480, so total time comes to 960. Obviously you will say for second machine our additional means incremental time is 360 hours. Now let us come on to learning curve analysis for what percentage? 90%. Same case, 600. If we produce one more machine, so total machines will be 2. Learning rate now is 90%. So whenever our output gets double, our cumulative average time gets multiplied by learning rate. It will become 600 into 90%, which comes on to 540. If we are saying that for 2 machines, our cumulative average time is 540, so that means our total time will be 540 into 2, which arrives at 1080. We are aware that our additional time is, for means incremental time is 480. Second point. Now we were asked that whether 80% is showing faster learning or 90%. You are aware that at 80% learning rate is means incremental time is 360 hours for additional machine, and at 90% it is 480. Means at 80% you require less number of hours to produce second machine. At 90% you require more number of hours. I told you in my class as well that learning rate and improvement rate are inversely proportional. Improvement rate for first case will be 20%, and in second case it will be 10%. So which is greater improvement? You will say 20%. Or in simple terms, we are saying that in this situation, because less time is required at 80%, let me write down first. Learning at 80% learning write in this way. 80% learning is faster learning as it requires lower incremental time to produce second machine. Got it? Let me go on to next question, question 2a. And I will be a bit fast now. I will increase my speed a bit. Very simple question. This question was asked in May 15 Nepal paper. If you remember, a catastrophe happened in Nepal, earthquake happened, and this question is exactly same, word to word same of question 2a of that May paper, which was meant only for Nepal. This question is copied from there. All the basics of this question are from my book only. Very simple, just basic level of activity based costing. So let's start reading this question. Speedo Limited is a specialist car manufacturer that produces various models of cars. The organization is due to celebrate its 100th anniversary next year. To mark the occasion, Speedo Limited intends to produce a sports car. Speedo Limited is intending to produce a sports car. What is it known as? Model Royal. As this will be a special edition, production will be limited to 1000 numbers of Model Royal cars. Means Speedo Limited has thought that it will not produce anything more than, any figure more than 1000 units of Model Royal cars. Speedo Limited is considering using target costing approach and has conducted market research to determine the features that consumers requires in sports car. Means some features are special features which are required in a sports car, so they did some market research. Okay. Based on this research and knowledge of competitors' product, the company has decided to price Model Royal at 9,75,000. Let us say it's a Honda City car and it is costing rupees 9,75,000 rupees. Now, company requires an operating profit of 25% of the selling price of the car. It is very simple to calculate target cost. How come? 9.75 minus 25%, you will arrive at target cost. Details for the forthcoming year are as follows. Details are given as follows. Let's see what the details are. Forecast of direct cost of Model Royal car. Labor was this and material was this. Annual overheads have been provided and two notes has been provided to you, one for each kind of overhead. First is production line cost, 2310 in lakhs. Figures are in lakhs. Production line that would be used for Model Royal has a capacity for 60,000 hours per annum. Per year, they are producing 60,000 machine hours. The production line time for Machine Royal is 6 hours per car. So it is very simple to calculate for one car. How come? 2310 divided by 60,000 into 6 will come. You will arrive at one car. In case you require for 1000 cars, you will multiply them by the figure by 1000. Very simple. Ahead, let's read ahead. This production line will also be used to make other cars and will be working at full capacity. This production line will be used at full capacity and 60,000 is full hours for full capacity. So there is nothing to be thought about this point. Everything has been given that 60,000 are total hours for 2310 lakhs. So it is very easy to calculate. Let's come on to point number 2. Note 2, which was meant for what? Transportation cost of 900 lakh. See, some model of cars are delivered to showrooms using car transporters. Okay, 60% of transportation costs are related to number of delivery maids. We have been told that 60% of the total cost are related to delivery maid and 40% are related to distance travel. Means we need to segregate them, this cost of 900 lakh, into two parts. First is 60% and another is 40%. Okay, the car transporters have forecast to make a total of 640 deliveries. Means for this 60%, they are saying that cost driver quantity will be 640 in the year and carry 10 cars each time. And every time a lorry comes, say it carries 10 cars at a time. So to arrive at one car, we need to divide it by 10. Got it? The transportation will be, the car transporter will always carry its maximum capacity of 10 cars. Means there is no contradiction that let us say we have a wild assumption that, let us say, if one lorry took only 8 cars and other took 10 cars, there is nothing, no kind of scope for such kind of wild assumptions. Got it? Further, the total annual distance traveled by car transporter is expected to be 2,25,000 kilometers. Now we are talking about these 40%. We have been told that 2,25,000 is the total travel distance. 50,000 kilometers of this is for delivery of Model Royal cars only. So it is very easy to calculate. Means we will first calculate 40% amount, then divided by 2,25,000 multiplied by 50,000, we will arrive at that Model Royal cars cost. We will divide it by 1000 and we will arrive at per car cost. all 1000 model royal cars that will be produced will be delivered in the year using car transporters. Okay, I need to check this calculation whether I have told you, means it may be possible that while explaining some kind of miscalculation might have done or something might be left. While doing the question I will cover it up. Now required, what is required? Let's see. Calculate the forecast total cost of producing and delivering a model royal car using activity based costing principles to assign the overhead cost. We need to assign overhead, means these overhead costs using activity based costing principles. Very easy. Second point, calculate the cost gap that currently exists between forecast total cost and target total cost of model royal car. Means in first part we are supposed to calculate total cost as per activity based costing. Initially we have already calculated in mind itself about target cost, and in part B what we are supposed to show is that difference only, nothing else. Got it? So let us come on to solution part. Let's write the solution. First of all, in part 1 we are supposed to calculate forecast total cost. So write down calculation of forecast total cost per unit using activity based costing. Material cost was provided to you as 4,75,000. Labor was given as 2,50,000. Let me start with overhead now. Main concern is about overhead only. First cost is production line cost. As told to you, this cost will be divided by 60,000 hours and will be multiplied by 6 hours to arrive at cost for one car. We are right now calculating for one car. Why? Reason is it was asked for single car. I will show you the question again. It was specifically asking for single car. 23,100. Let me show you the question. See, a model royal car. Got it? Main emphasis shall be on the word a, means single. Now, after production line cost, another cost is transportation cost. It will be segregated into two parts: delivery related and distance related. Delivery related and distance related. First of all, we are supposed to multiply this 900 lakh into 60% and 40%. Now, if you have question paper in hand, you can find that 640 deliveries will be made and 10 cars per delivery. 10 cars per delivery. I already did some calculation to save your time. Got it? Now let us come on to distance related. Total distance travel was 2,25,000. Royal car's distance traveled was 50,000. This is for 1,000 cars. So for one car it will arrive as 8,000. Total will come on to 764,537.50. I already did some calculations to save our time. These calculations will not take much time in examination, but to save some time I did some calculations. Second point. Cost gap निकालना है. Let us find that cost gap. Calculation of cost gap between forecast total cost per unit and targeted total cost per unit and targeted total cost per unit. Target selling price per car was 9,75,000. And target profit provided was 25% of selling price, which comes on to 2,43,750. Obviously, our target cost will arrive as 7,31,250. Okay. Forecast total cost as per 1 means in part 1 we already calculated some total cost. Your cost gap is of rupees 33,287.5. That's your cost gap. Let us come on to question 2b. 2b. This question is again from Nepal's paper, and this question was question 4A of Nepal paper, May 15. Let us see what this question is all about. Learning curve question or linear programming question, very easy question. Just You need to understand the question, and everything is very simple. Means you need to understand and make information summary. Means you can, if you are able to summarize the question, believe me, this question is wonderful question, very lovely question, very simple question. Let me start this question. A manufacturing company has 100 kg of A, 180 kg of B, and 120 kg of C. Okay. You have maximum capacity available with you. Ingredients available. Got it? Means let us say you are making some food. In food you require some ingredients. Same as this situation. To make some products, let us say XYZ, you require some ingredients. And you have been provided that these 3 ingredients have maximum capacity of this much amount. Company can use these materials to make 3 basic products, namely 5, 10, 5. Let us say your products are D, E, F, D, E, F, D, E, F, something like this, D, E, F. Means 3 products are D, E, F, not like this, it may be wrong. D, E, F are 3 products. We will cross verify how come these are made, where the number in each case represent the percentage of weight of A, B, C respectively. This is A, B, C, and for this is for D, this is for D, this is for E, and this one is last one is for F. This is something like that. Got it? Okay. Now the cost of 3 in raw materials are as follows. Cost of raw material has been provided. See, before going ahead, I believe we need to first jot it down to make this question a bit simple. Let me write it down. Let's make some information summary. Let's summarize the information. Question 2B. Let me first write that, let us say D, E, and F be products to be manufactured. I am writing it here. D, E, F. 3 products are there, and 3 ingredients are there, A, B, and C. Then availability has been provided to you. And cost per kg is given. C. What has been provided to us is, for D, this percentage was, I think page number was 6, 5. For D, percentage was 5, 10, 5. So let me write in this way: 0.5, 0.10, 0.5, 0.05. Same goes for E. Percentage is different, 5, 5, 10, and here is 0.20, 0.05, and 0.10. Availability is 100, 120, 180. Let me check that whether total is 100% or not. It is 0.20, 0.20, 0.35. Means you will say that 100% D is not ready, not yet ready. Let's read this question again and ahead so that we can comprehend it better. Cost per kg, we will write it down. Inert ingredient. Inert ingredient, what do you mean by inert? Means material that cannot be reacted. Means it is material which is apart from ABC. This has been provided to us. Okay. That's why the percentage was not 100%. So you can say that your inert material, first write down the cost, 64, 16, 40, and here it is inert ingredient, material लिख देता हूँ to make it easy. 0.80, 0.80, 0.65. For your comprehension purpose, you can also write the meaning of inert material. It means that is material that cannot be reacted. 1.00. You are not supposed to write this red portion in examination. Got it? And you were provided that cost of this inert material is 16 rupees. Further, maximum production has been provided. Let's read the question further to understand it better. Selling price of these products are 32.6, 34 and 36. There is a capacity restriction of the company product 5, 10, 5, means you cannot produce more than this much amount, whatever it is, 5, 10, 5. We will use it later. And you have been told that so that company cannot produce more than 30 kgs per month. Okay. Now you are aware about what? That product, I think I didn't read the line properly. Let me read it again. I think there was some communication gap on my part. So let me read this line again. There is a capacity restriction of the company product 5, 10, 5, means the product which is saying 5, 10, 5. First one was the product which was saying 5, 10, 5. Second was 5, 5, 10. Third one was 25, 10. I am talking about first products which we have named as D. So in simple terms, what question is saying that there is a capacity restriction of product D about what is the capacity restriction? That it cannot be produced more than 30 kgs per month in simple terms. Examiner deliberately use these kind of lines to confuse you, but I am sure you will not get confused because you are a very smart kid. Now no more a kid. We already noted down. Okay. We have been provided selling price. So by selling price we can arrive at profit. Why? Reason is very simple. What he is asking is maximize the monthly profit. Maximize the monthly profit. Let us read that line. Only formulate this problem, means we are not supposed to solve it, as LP model to determine the production in kgs of each product which will maximize its monthly profit. Okay. In Nepal paper, this question was asked for 8 marks, but here this question has been reduced by 2 marks and has been asked for 6 marks. I think this question deserves 8 marks, not 6 marks, but anyhow we cannot contradict the examiner. Let us begin with this question, but first calculate total cost. Total cost can be calculated very easily. Let me explain you for one point, then you can calculate for remaining. Let us say I calculated for D. Fine. See, for D you are aware that 64 into 0.05, 16 into 0.10, 40 into 0.05 and 16 into 0.8 will, if we multiply all these figures and take a sum total, you will arrive at total cost of producing D, because you will take, for example, in D you know that 5% is A, and for 1 unit of A you know that 64 is the cost, so you will multiply it by 5% to arrive at the cost which is being used of A in D. Fine. So let us say I write it for 1, then I will not write it again. For first only D I am writing 64 into 0.05 plus 16 into 0.10 plus 40 into 0.05 plus 16 into 0.80. Your cost will be 19.6 here. Similarly, we can calculate for E and F. We are aware about selling price per kg, 32.6, 34.8 and 36. So we will arrive at what? Profit per kg. Here it will be 13, 14 and 8. Solution portion. Let X, Y and Z be the quantity in kgs of D, E and F respectively to be produced. Let us say this is the quantity. So what will be the objective function? You will say maximize. Maximize what? Z. Z is what? Profit. Profit, you will say 13x, very easy now, plus 14y plus 8z. So you will say, sir, in case we make information summary, it is very easy to make objective function as well as constraint. So it is imperative for you to make what? Information summary in examination. Anyhow, subject to constraints. What are the constraints? First constraint, 0.05x plus 0.05y plus 0.20z shall be less than or equal to 100. How come? You are aware that you only have how much amount of quantity? You are aware that for A your availability capacity constraint is of 100. So you will say in this way. Anyhow, let me proceed. Same goes for B. and third one as well. Then we were aware that maximum production of D, we have seen, we have analyzed that D cannot be produced more than 30 units. And last and most important, non-negativity constraints. Last and most important, non-negativity constraints. Got it? Let me proceed now. Question 3A. Very simple question. A lollipop question for market size, not market size, sales margin variances. Means this question is same as the question number 23 of your 11th edition book, Standard Costing, in which you were supposed to calculate Bravo, Super, etc. Exactly same question, rather a simple one. Let's go with it. Z company manufactures two type of flooring rolls. Budgeted and actual data for 2015 are. Original data means static data has original budget means static budget has been provided here, and actual results are provided to you. Two products are provided, industrial and domestic, and same is this case. Same is for actual results. Now problem is, in our information summary, in the way we analyze data, this shall be on left hand side and units and contribution shall be on top side. It's not compulsory, but such kind of presentation makes a question a bit easy. So I would recommend you to transpose this question and write it in the same manner in which you usually do the question, because in that situation you will not commit any mistake. Got it? Anyhow, let me read it ahead. It says, in late 2014, marketing research estimated industrial volume for industrial and domestic flooring at 80 lakh rolls. Actual industry volume for 2015 was 70 lakh rolls. Means industry size has been provided to us, budgeted as well as actual. Compute. Two things has been asked. First is sales mix variance and sales quantity variance by the type of flooring rolls and in total. And second point, market share and market size variance. Obviously, because in second part market share and market size variance has been provided. So for first part, turnover base cannot be used. Secondly, in question contribution has been provided, so you don't have any figure for turnover base to calculate sales variances on the basis of turnover. The main thing to be noted down here is that you are supposed to calculate sales mix variance and quantity variance both individually for both the products and in total. Not just total will do. So your formula shall be such in which you can calculate both of them, not individual one. Okay. So let us start this question first. Data for variance analysis. Budget and actual. Volume, margin, rupees per unit, volume, units, amount, units. Amount rupees, not units. I committed a mistake. Let me fix it. Shit. Wait. Rupees in lakh. Revised budgeted volume in units. Two products are there, industrial and domestic. Industrial and domestic. Let me note down the figures from question itself. You also jot them down. See, I think it was page number 7, no 6. We were provided total figures, units and contribution. I simply divided this contribution, total contribution by units. Contribution is in lakhs, units is in thousands. Units are in thousands. Got it? So I made this table for simplicity purpose. We need to jot down some more things. For example, market size has been provided to us. Budgeted market size is 8,000 and actual is 7,000. Percentage will arrive at 10%. 800 divided by 8,000. 800 divided by 8,000 is 10%, and 840 divided by 7,000 is 12%. Next thing is, we need to copy this figure 840 here, okay, and then using this 200-600 ratio, we need to calculate this revised budgeted volume, means actual volume is budgeted volume ratio. Figure will be 210 and 630. All figures are with us. Now just we are supposed to calculate the variances. Let us come on to find the variances. Very simple. Solution part is here now. First point, sales margin mix variance. I am calculating in thousands. We don't need to write the formula. You can write if you want, but there is no need to write the formula. 252 minus 210 into 50 for industrial, and for domestic 588 minus 630 into 588, means what we have done is, this minus this and this minus this, got it? Actual minus revised budgeted into standard margin per unit. Second part, not second part, means second variance, sales margin quantity variance. It will be very simple, revised budgeted minus budgeted industrial, domestic, some people ask me, sir, can't we use direct formulas? I say no, you cannot use direct formulas. Formulas like difference in these figures 840 into 340 upon 800. No, you cannot use these formulas under any situation. Reason is, question has specifically asked to calculate product wise as well as total. If question was silent, if question would have been silent, you can definitely go by that formula. But here question is specifically saying what? You need to calculate for individual product as well as for totality. So you cannot use that formula because it will calculate only in totality and not for individual products. Got it? Total is 1700. Second point, market size variance. it is actual size means 7,000 minus budgeted size means 8,000. You know that market size has reduced by 1,000 units. Oh sir, yes, market has reduced by 1,000 and we have budgeted that our share in market will be 10%. So obviously our 10% less products shall be sold and our loss shall be please make sure one thing I have done is you also take care of that, is that I calculated everything in thousand. Some things are in lakhs, especially figures, contribution figures. I changed them and wrote them in thousands. Got it? So this figure will arrive at 4250 adverse. Last variance is market share variance. This variance is market share variance. See, now the best thing is, for example, we did product differentiation. Here 2% is increase in our share in market, which is because of product differentiation obviously, and you will say that although market size has shrunk to 7,000, our share has increased by 2%. So our profit shall increase by 5950 favorable. If you want to cross verify, you can definitely total market size and market share variance and cross verify that whether it comes to quantity variance or not. Got it? Let us come on to question number 3b. This is a wonderful question, very good question, same as question 44, page 136 of 11th edition. You can refer that question. Means some people said after examination to me that sir, this question was very lengthy. Rather, I would say that they were wrong because it does not require all crashing to be done, and what mistake they have committed is that they have gone for all kind of crashings, but this question require only 1 or 2 crashings, not more than that. Rather, I think only 1 crashing. That was the only reason some student means I would say that they fall in this trap, and despite my warning in examination in classroom, they committed this mistake. Anyhow, these are lessons for those who were means let's not talk about it anyhow. You can understand what I am supposed to say. These are lessons, just I will say. B part. The following table shows for each activity needed to be to complete the road construction project. You have been provided a table and you have been told that these are the activities, okay, and these are times, normal time, shortest time, cost of production per day. The normal time and shortest time in which the activity can be completed, okay, and the cost per day for reducing the time of each activity. Cost per day means crashing cost per day, or you can say cost slope. They are synonyms. Per day is cost slope. The contract indicates a penalty clause of ₹80 per day over 19 days. Means if a project is completed in 20 days, 80 rupees will be included. If a project is completed in 19 days, 80 rupees will not be included. Overhead cost is 150. Let us say you are completing the project in 20 days, then overhead cost will be 150 plus 80 will be there. If you are completing project in 19 days, your cost will be just 150 because there will be no additional cost, no penalty cost. The cost of completing the 8 activities in normal time is 6,000 rupees, and it says that normal times cost for this total 8 activities, for these total 8 activities is rupees 6,000. Okay, now required, draw the network diagram, very simple, for the project, and identify the critical path. You are supposed to identify the critical path and show normal duration and minimum duration of different path. Not just normal duration, you are also supposed to show minimum duration of all the paths. Okay, calculate the total cost associated to normal duration of the project. Okay, total cost, what is the total cost? We need to calculate. And last, crash the relevant activities systematically and determine the lowest and the associated time. Let us begin this question. Let us see how we can let's begin with this question, I would say. Fine. First of all, we are supposed to make what? Our network diagram. You have been provided certain activities. I am making the network diagram. 1 to 2, 1 to 3, 1 to 4. Then 2 to 5, 2 to 4, 3 to 6, 5 to 6, 4 to 6. Very simple network, very simple network. Okay. Critical path is with normal duration of path table paths duration in first part you were told that minimum duration is also supposed to be calculated, so you write minimum duration as well. And after crashing, let us take normal duration first. Total will be 22, 19, 19, 15. Shortest duration, because I have not written shortest duration on the network, what I will do, I will write the total here so that it shall not be difficult for you to understand. 5 plus 9, 5 plus 4 plus 6, 5 plus 4 plus 5 and 4 plus 5. Total comes to 14, 15, 14, 9. Your critical path is 22 days, means 136. So you will write here first, come up. This is your critical path. You don't need to show or highlight it in examination. You can if you want, fine. For highlighting you can do one thing, you can make double lines instead of using highlighter, because highlighter is not allowed in examination. Critical path is 136 with normal duration of 22 days. Okay. Second thing we are supposed to make is, I think he told us to calculate total cost for normal duration. Total cost of the project for the normal duration. We are aware that normal cost is 6,000. Overhead cost will be 22 days. We are aware that per day cost is rupees 150. We already see that. We already saw that. And your figure will be 3,300. Last cost is penalty cost. Why penalty cost? Obviously because 3 days penalty will be applied. It exceeds 19 days, so 3 days penalty will be applied. Okay, this is your second part. Now crashing part remains. Let us come on to crashing part. Slope table. You can obviously skip it in exam. I am making it just for your convenience. I would suggest you to skip this table in examination, because it will just waste your time and nothing else. It is totally unproductive. Without this table you can obviously do the question, but just for your convenience I am making it. Let us write down all the activities. Normal time, crash time means shortest duration, and maximum possible reduction and cost slope. Maximum possible reduction was not given in question, that we need to calculate on our own. Occasionally what happens is, while writing from question, I commit some errors, clerical errors. For example, instead of writing 4 I write down 5 or 9. Student says, sir, how come this figure arrives? There is nothing as such. Let us say I write erroneously any figure as 6. You need to keep in your mind that we are here to understand the concepts and not my clerical abilities, not to vouch my clerical abilities. So instead of going through that those kind of nitty-gritties, I would suggest you to concentrate on concept only, because these kind of small things can be handled by you on your own very easily. Fine. Let me come on to decision table now. That's the main table. I will write very small. Crashing number, critical paths, options for crashing, direct cost slope in rupees, decision, maximum possible reduction in days, number of days crashed. I will include one or two column here. Let us say, let me introduce one column of indirect cost. Why that column? Reason is simple, because we need not to work after that point wherein our indirect cost slope and direct cost slope don't match. Means in case my savings in indirect costs are lower for crashing in comparison to my extra cost, means cost slope, direct cost slope, then we need not perform that kind of crashing, because we are not going to do anything productive. Let me show you what I am saying. Indirect cost slope, that is overhead cost plus penalty cost. Crashing cost rupees in rupees, and last is cumulative crashing cost in rupees. See, first crashing. At this point, our critical path is just 136. So obviously there will be only two options, 1 or 2, 1 to 3, and second one will be 3 to 6. There cannot be any other option. Direct cost slope, we can go through the question or from this slope table, and obviously because direct cost slope is lower for 1 to 3, we will crash this activity only. Crash activity 1-3. How many days is crashing for 1-3 is possible for 4 days. Fine. So we will write that maximum possible crashing is 4 days. It's not compulsory that we crash it by 4 days. For that we need to come on to path table. Why? If I crash it by say 4 days, what will happen? See carefully. it will be 18, 19, 19, 15. Oh, our new critical path will be 19. Our duration will get reduced, project duration will get reduced by 3 days. What I mean to say is our project duration is reducing by 3 days, although I am reducing my cost, I am incurring cost for reduction by 4 days. Means 1 day crashing is irrelevant here. Same purpose can be achieved if we crash the activities by 3 days, that activity 1-3 by 3 days, because if we reduce activity 1-3 by 3 days, then our path's duration will be 19, 19, 19, 15. So obviously if we crash it by 4 days, then also project duration is reducing by 3 days. If we crash it by 3 days, then also project duration reduces by 3 days. So we will not go for 4 days crashing, rather we will go for 3 days crashing. This will become 19, 19, 19, 15. Here instead of 9 it will become 6. Here in slope table it will be 1 day will be remaining. But there are certain activities in which no crashing is possible, for example 2-4 and 5-6. So what we will do is, just for sake of our knowledge, we will cross them. We will cross those activities on our network, 2-4 and second one is 5-6. Just to understand that these activities cannot be crashed further, we simply cross them in our network. Now coming back to decision table, we will write that we will crash activity 1-3 by 3 days and not by 4 days. Our crashing cost for crashing it by 3 days will be 300. It will be 300, 100 into 3. Okay. And our total crashing cost till yet will be 300. But sir, what about indirect cost loop? My friends, there will be two kind of cost in this. One is 150, another one is 80. Okay, we are incurring, right now we are incurring two kind of cost, 150 as well as 80, and on each day crash 230 rupees will be saved. 150 of overhead cost will be saved, and 80 rupees of penalty charges will be saved. So our saving is of 230, additional cost is of 100. Obviously per day we are getting a benefit of 130 rupees. Why? Our additional cost is of 100 and saving is of 230. So net figure is 130. We are gaining rupees 130 if we crash this activity 1 to 3 by how many days? 3 days. Let me proceed further. See, let us come on to second crashing. Now if we see in path table, we have 3 critical paths. We don't have single critical path, rather we have 3 critical paths. Oh God, 3 critical paths. Yes, we have 3 critical paths. Let me write them down. And we are aware that if we crash it further, our minimum crashing cost, let me do it for you. First write down the 3 critical paths, 1-3-6, 1-2-5-6, then and 1-2-4-6. Let's first write down the options for crashing, then I will explain what I was saying. I wrote down all three options. See, first option will be see very carefully, 1-3 and 1-2. Why this option? Let me explain you what three critical paths. What are our three critical paths? First, second and third. These are our three critical paths. First, second and third. These are our three critical paths. Now, means 1-4-6 is not our critical path. We need to find, first of all, some ways by which maximum paths can be crashed by crashing least number of activities. So one way can be that I crash 1-2. If I crash 1-2, what will happen? One activity of this critical path and one activity of this critical path will get crashed. Reason is 1-2 is my common activity. The problem is these two critical paths will reduce. These two critical paths will reduce, but not this one. So I need to reduce one activity from either 1-3 or from 3-6. Means from this green critical path I need to reduce either of these activities. Okay, so combination will be, first option will be 1-3 and 1-2. Second option of crashing will be 3-6 and 1-2, because by crashing this way all three critical paths are being reduced. Let me write them down for you. First way was 1-2 and 1-3. Second was 1-2 and 3-6. Okay. Is there any other way as well? Let me find it for you. Wait for a second. Yes. Now, I have taken the option of 1-2. So I will not consider this option again. I have three critical paths. First one is this, second one is this, and third one is this. I have three critical paths and I need to think about other options by which my critical path, means my project duration, can be reduced. So what I am thinking is, let's do one thing. Let's reduce 1-3 by 1 day, 2-5 by how many XYZ days, and 4-6. Okay, this can be a good option. Yes. Alternatively, I can do one thing. I can do what? Instead of 1-3, I can do 3-6, 2-6 and 4-6. This way, all my critical paths will get reduced. So I have two more options in hand. First one is 1-3, 2-5, and let me write them for you. 2-5, 4-6, okay. So these are my options. Obviously I will go for first option for crashing if I want to, but I will not be willing to go for any crashing. But let me write it down for you. Say I am willing to go for first activity, first option. Crash activities 1-2 and 1-3. 2, 1. Activity 1-2 can be reduced by 2 days and activity 1-3 can be reduced by 1 day. So obviously maximum 1 day can be reduced for both the activities if you want to reduce both the activities. Okay. My point here is, if I am willing to reduce it by 1 day, shall I reduce? Answer is no, I shall not. But why, sir? Why you are not willing to crash anything, any more activities? Reason is, now my indirect cost slope is 150 because I am already at 19 days. And if you remember, question specifically says that you will not incur any penalty cost at 19 days. Penalty cost is only in the situation if your project duration exceeds by 19 days. So by that means you can say your indirect cost is just 150 now. If you will proceed to crash it further beyond 19 days, what will happen? Your overhead cost will get saved. Your penalty cost will not be saved. Your overhead cost will be saved, which will be 150. On the contrary, your direct cost slope is 190. Minimum direct cost slope is 190. So your additional cost of direct cost will be 190. In simple way, I can say that there will be incremental cost of rupees 40 if I crash it further. I am not supposed to find minimum duration here, I am supposed to find optimum duration. So there is no use of going for further crashing. Reason is pretty simple. You are aware that your indirect cost slope is 150, your direct cost slope is how much? 190. So you will not go for any further crashing. There is no need to waste any time in crashing anything. Got it? Let me write it for you. At crashing number 2, our direct cost slope is lower than indirect cost saved, so we will perform crashing 1 but not crashing 2. Hence, optimum duration, we were supposed to calculate optimum duration and not minimum duration, is 19 days. total cost of the project for optimum duration. You are also supposed to calculate total cost. Let me calculate it for you. Normal cost was provided as rupees 6,000. Overhead cost will come as 19 days at the rate rupees 150 per day, means 2850, and crashing cost is rupees 300. Now you need, I believe all of you will understand that the major problem which students committed, the major mistake which students committed was they keep on doing crashing, worthless crashing, and they lost their time as well as marks because it was totally irrelevant step. Got it? Your answer is finished now. Let me come on to question number 4a. Question 3rd, finish. See, this question is ditto same as question 6 of decision making 2. The only difference is it is a very simple question, means extracts of this question, that particular question 6a of my book, question number 6 of my book, few extracts have been picked up and have been inserted in this question, and this is a very basic level question. That was a very advanced question, and this is a very basic level question. So I believe giving 8 marks to this question is not worthwhile. If I would have been, if I were examiner, I would have given at least, at most 6 marks to this question. Anyhow, let me proceed and do this question for you. See, question says a company manufactures 4 products. The annual demand for products, selling price and variable production costs are as follows. You have been told that annual demand for products, selling price and variable production cost are as follows. Okay, now 4 products are provided, demand is given, selling price, direct material, direct labor, variable overhead per unit, other data. Variable overheads are absorbed on machine hour basis at rate of 1.2 per machine hour. This is given so that we can calculate hours. For example, 1.2 hours will be utilized here, 1.2 hours here, similar way 2 hours and so on. This rate is given just to calculate hours per unit. Fixed overhead rupees 46,84,000 has been provided. Then production capacity is 8,15,000 machine hours per annum, and it has been provided that if we subcontract or purchase these products from market, then our bought-in price for these 3 products P, Q, R is 21.6, 36, 24 and 48. That means S is supposed to be in-house production only. We have no other option. Ranking for production will say that S will have first ranking for production because we cannot purchase it from market. Anyhow, you are required to calculate the best product mix for the year and resulting optimum profit. Let's see how we are supposed to do this question. First of all, we need to calculate savings per unit, then per hour, so that we can rank the production. Let's come on to working note. Statement showing ranking. Products are P, Q, R and S. I am writing S deliberately because this way we will calculate at least cost of production. Purchase price, rupees per unit, 21.36, 24, 48 and nil. Relevant cost per unit in manufacturing. First is direct material. Question is provided the cost as 10.08, 13.20, 30.48, 24.96. Then comes direct labor, 4.08, 4.08, 6.72, 6.36. Variable overhead, total will be 15.6, 18.72, 39.60, 33.48. So if we manufacture these products instead of purchasing them, then our savings per unit in manufacturing will be 5.76, 5.28, 8.40, and obviously not applicable because we are not going to purchase it. How we calculated this 5.76? It's very easy. 21.36 minus 15.6, and similar way for other products as well. Now we are aware about hours per unit. 1.44, 1.44, then 2.4 and 2.416 was variable cost per unit, and it was provided to us that 1.2 per hour is the rate of variable manufacturing overhead. So our hours are 1.2, 1.2, 2 and 1.8, 2 and 1.8. Savings per hour in manufacturing, it is 4.8, 4.4, 4.2, and obviously not applicable. Rank first, second, third and fourth. Let's come on to solution. statement showing optimum production mix and profit. Statement showing optimum production mix and profit. This format has been prepared by me at least 50 times in your class, so I believe every one of you is through with this format, and I don't need to recall it for you. First is S, second ranking was of P, then Q, and last is for R. Total R's available are 8,15,000. We are aware about R's per unit 1.8, 1.2, 1.2 and 2. We are aware about production units for, let us say first calculate contribution per unit, then we will come to production units. Contribution per unit will be 47.88 is selling price, and our cost in working note means we have arrived at cost in working note is 33.48. So this is 14.4, 8.28, how come? 23.88 minus 15.6, this is 26 or 28.68 minus 18.72, 55.08 minus 39.60, so yes, now we see that S maximum production, maximum sales possible for S is 99,000. To produce this 99,000 units, if we multiply it by 1.8, we will arrive at 1,44,000. Means we require 1,44,000 hours to produce these 91 lakh. I think I am mistaking somewhere. It will be not 1,44,000. It will be 1,78,200. Yes. Here it is 1,20,000. 2,23,200, 1,86,000. What I am doing? Just a second. Here it shall be 1,44,000. 1,86,000, 2,23,200. Then remaining balancing figure R's are 2,76,800. And in these R's, where we can produce maximum 138,400 units of product R. Our total contribution is 14,25,600, 18, not 18, 993,600, 1852 560 2086 704. $63 58 464. You are requested to cross verify these figures. So obviously we are unable to make all production on maximum, we are unable to fulfill maximum sales of R. We can do what? If there is profit, if there is a contribution in purchasing these units and then selling in market, then we can definitely fulfill the remaining demand. Let's see what will be the contribution on products we bought. Products, units, contribution per unit in rupees, and total rupees. Or maximum sales possible is, means maximum demand is 171. We already produced 138 400. So obviously if there is a contribution, we will purchase 32 600. Yes, there is a contribution. How come? 55.08 minus 48. So your total contribution will be 256 296. If we purchase price is 48. If we sell them, means product R, selling price is 55.08. There is a clear cut contribution of 7.08. Our total contribution for both production and purchase is fixed overheads so our net profit will be 19,30,760. $19,30,760. This question is again a classwork question, word to word copy. The only difference is in last line, this, not this, this one, from here to here. I used to write this assumption, and in this question, examiner paper setter has already written this assumption in question itself. Otherwise, if you will read question 16 of your book, 11th edition simulation, you will find that this is ditto same word to word copy. Not even a single figure is different. Let me read it for you. A bookstore wishes to carry system analysis and design in stock. Demand is probabilistic and replenishment of stock takes 2 days. That is, if order is placed on March 1, it will be delivered at the end of day on March 3. If I order on 1, it will be delivered at the end of March 3. The probabilities of demand are given below. You have been provided with demand and their probabilities. Each time an order is placed, The store incurs an ordering cost of rupees 100 per order. Yes, this is also different. There I think it was 10 rupees per order. Here he made it 100 per order. The store also incurs a carrying cost of rupees 5 per book. In that particular question it was 0.5, it is here 0.5. No, it is here 5. Last thing which I already told you, the inventory carrying cost is calculated on the basis of stock at the end of day. Inventory carrying cost is calculated on the basis of stock at the end of the day. This is not the assumption. Wait, there is something. Oh, sorry. Here assumption is written. Okay. The manager of bookstore wishes to compare two options for his inventory decisions. Order 5 books when inventory at the beginning of the day plus order outstanding is less than 8 books, means when opening stock plus order outstanding, total of them is less than 8, then order 5 books, and in second option, when this total is less than 8, then order 8 books. Currently, means at present situation, beginning of day 1, the store has stock of 8 books plus 6 books ordered 2 days ago are expected to arrive next day. Means currently we have a stock of 6 books and we ordered 6 we have a stock of 8 books and we ordered 6 books 2 days ago. Don't see that 6 books is not in these options. As already told you in class, this was earlier quantity, order quantity. Now order quantity is different. Okay. Further, it is assumed that demand occurring during the day can be met. This is the line. This is the assumption which I was telling you. This is the assumption. Further, it can be assumed that demand occurring during the day can be met out of the stock received at the end of day. Okay. The first thing in this question is 6 books were ordered and are going to arrive next day. Means if today is day 1, on day 2 they will arrive. Okay. Opening balance is 8. Let us proceed with this question. Let's make random number coding table, analysis table, or whatever way name random number allocation table. Some people call it by different names. I am using the word random number coding table. Fine. Yes. Demand probability cumulative probability and range 0, 1, 2, 3, 4, 0.05, 0.10, 0.30, 0.45, 0.10. 0.05 cumulate, we are accumulating it. So range will be 1 less from this, 0, 0 till 0, 4, then 0, 5 to 1, 4, 1, 5 to 4, 4, 4, 5 to 8, 9. I told you logics of everything in our class, every small reason why we do this, what is simulation, what are random numbers, why this kind of range has been prepared. I cannot repeat in every logic. I cannot repeat every logic in this small video. Anyhow, let us come on to simulation table. Days, opening stock. Then see, first thing is opening stock. What we use, what is added in opening stock? Order which is received by us. Okay. Now, as per random numbers, we can arrive at our demand. Obviously, demand means sales, and after detecting such demand, we will arrive at our closing stock. We will arrive at our closing stock. One, two, say, just a second. There are two options. Option A. One, two, three, 4, 5, 6, 7, 8, 9, 10. 10 days demand, 10 days has begun. Opening stock is 8, we are aware, and on next day we are going to receive 6 units, we are aware. Further, we know about random numbers. Random numbers provided to us are 89, 34, 78, 61, 63, 81, 39, 16, 13, 73. Got it? Okay. Let's place this random number in random number coding table and we will arrive at demand, which is 3, 2, 3, 3, 3, 3, 2, 2, 1, 3. Fine. Okay. Now let's begin. Let's begin the simulation table. Opening stock is 8, order received is nil, demand is 3, so obviously closing stock will be 5. Closing stock is 5, okay. Opening stock will be 5. As we are aware that 5 plus 6 is total 11, so we will not make any order, we will not place any order here, okay. Closing 5 plus 6, 11, minus 2, 9. We will take cumulative because it has been provided that although order is being received at the end of day, but demand will get fulfilled even from this order which is being received at the end of day. For example, we have a bookstore, and let us say a student come to us and ask for book for Parag Gupta, costing book for Parag Gupta. Now what I will say is, you come in the evening, we will get some new stock and we will provide it to you, and that student is ready to come in evening. That's the point. Fine, that is the situation. Next day opening 9, again it is more than 8, so we will not consider it. Closing is 6. Next day opening is 6. Order outstanding nil. So we will place an order. We will place an order 5 units, and our closing will become 3. Next day opening 3. How many days will it require to receive the order? If it is made on 1st, we will receive on 3. If it is made on 4th, we will receive on 6. Fine. Okay. So opening stock is 3. Outstanding is 5, total is 8. If it is less than 8, then only we are supposed to place the order, so we will not place any order here. Closing is nil. Next day opening is, you will say, next day opening is nil. Fine. outstanding is 5, total comes on to 5, which is less than 8, so we will place an order. Okay, now closing will become 2. Don't worry, your demand will get fulfilled from these 5 units, because it has been specifically given in question. Next day opening is 2. Okay, this 5 we will receive on 9th. This 5 we will receive on, these 5 units we will receive on 9th. Okay, so 2 plus 5 is equal to 7. We will place an order and we will receive that order on 10th. Closing is nil. Opening is nil. Opening is nil. I think I committed one error. This 5 will receive on 8th. Yes. So closing will become 3, because it is these, the order outstanding is of 10 units. We will not place any order. Okay. Next is opening is 3. Total is 8. We will not place any order. Total is, closing is 7. Opening is 7. Obviously, we will place an order. Okay. And closing will be 4. Total stock, closing stock is 39. It was provided that we are supposed to calculate carrying cost on closing stock. So in this situation, our ordering cost will be 4 orders at rupees 100 per order is equal to rupees 400, and our carrying cost will be 39 books closing stock, total of closing stock, because the other way is you calculate carrying cost on daily basis, multiply carrying cost by carrying cost of 5 per book on daily closing stock. Alternatively, what you can do is calculate a total of closing stock and multiply it at once at rupees 5 per book. So total is 195. Total is what? 195. 595. Option B. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 89, 3, 34, 2, 78, 3, 61, 3, 63, 3, 81, 3, 39, 2, 16, 2, 13, 1, 73, 3. Okay, now we are aware opening stock is of 8. On next day we are going to receive 6. Opening stock is of 8. Next day we are going to receive 6. Initial few lines will be same. So I am just copying from part 1. From here onwards, day 4, because our opening stock plus order outstanding is less than 8, we will place an order, but here the quantity will be 8. Quantity will be different. It will not be 5 as earlier. It will be 8. Fine. Okay. These 8 units will be delivered on day 6. Closing stock is 3. Okay. Day 5 opening is 8. Total is 11. 3 plus 8, 11. So we will not order anything. Closing is nil. Next day opening nil. Closing will be 5. Yes, we will not order here because opening is 0 plus outstanding is 8, total comes on to 8. We are supposed to order when it is less than 8. Opening is 5, okay, and here we are going to order 8 units. Closing is 3, opening is 3. These 8 units will be delivered to us on 9th. We will not order anything. Here it is 1, 1, 8, and last is 8 opening, nil, and 5 closing. So our ordering cost in this situation is 2 orders at rupees 100 per order is equal to 200, and carrying cost is equal to 45 books at the rate 5 per book. At the rate 5 per book. Conclusion, option B is obviously preferable. Option B is obviously preferable. Let us come to question number 5. Again, this question is a copy of Nepal May 15 paper question 5A, but this is also a similar question of question 14 of my book. Let us read this question, very simple question. The budget of hotel for the year 2016 shows following room occupancy. Occupancy has been given to you. Quarter, 4 quarters has been provided. Okay, average occupancy has been given to you. Revenue for the year is estimated to be 60 lakh. You have been provided that during the year your revenue will be 60 lakh and arises from 3 profit centers, namely accommodation 45%, restaurants 35%, and bar 20%. But there is an asterisk. What does this asterisk says? The accommodation revenue is earned from several different categories of guests, each of which pays a different rate per room. Okay, you have been provided that there are different kind of guests and each guest pay different rate as per their rooms. Accommodation means something, some percentage wise has been provided to you. Revenue 100%, 100%, 100. If this is 100%, 30% is this. This way it has been provided. Okay, wages is 20%, 20 rupees. Okay, now let me proceed. Fixed cost for the year is estimated to be 9,15,000 rupees. You have been given that fixed cost is 9,15,000. As a means of improving the budgeted profitability by 20%, following 2 suggestions has been made. You have been provided that 2 suggestions are there. You want to increase the budgeted profitability by 20%, and you have 2 options. First option is to offer special 2 nights holiday at a reduced price of rupees 250 per night. You can offer one thing. You can incentivize customers by providing 2 nights at just rupees 250 per night. It is expected that those accepting the offer would spend an amount equal to 40% of accommodation charges in the restaurant, and 40% of the accommodation charges in the bar. You are well aware that if a customer enters and pays at this reduced price of 250, so what we will do is 250 into 40%, he will pay this much amount in restaurant and similar amount in bar. So you need to calculate, do the calculations, and you need to arrive at what number of nights etc. you need to land to achieve budgeted profitability, that you will find later on, obviously, because it has not been provided, so obviously he will ask for that only. Second option is to increase prices. Management is confident. Second is to increase prices. Something is missing here. Anyhow, management is confident that there will be no drop in volume of sales if restaurant prices are increased by 7.5%. Okay, if we increase the restaurant price by 7.5%, there will be no drop in volume. Okay, and bar prices by 10%. So we are willing to increase the prices of restaurant as well as bar. Accommodation prices would also need to be increased, but we have not been provided that how much it is, how much they are going to increase. Anyhow, calculate the budgeted profitability, means according to current situation, first of all find the profit. Then how many 2-night holidays would need to be sold each week in 3 quarters, means as I already told you in first part, you need to calculate how many nights we need to sell, so that in these 3 quarters, the main thing is we need to sell these nights in these 3 quarters, and these 3 quarters equivalent to 36 weeks. Okay, when occupancy is less, generally in 3 quarters occupancy is less, and for 1 quarter there is good occupancy, so we are not supposed to talk about that particular quarter in which occupancy is highest. Okay, to achieve desired profitability as per the suggestion. Okay, in these 3 low sales quarters wherein we have 39 weeks, we will follow first method, and we need to find how many 2 nights holiday we need to sell to achieve desired profitability. Second point, at what percentage the prices of accommodation would need to be increased as per suggestion 2 to achieve the desired profitability. Here first of all we need to calculate in second, as per third part we need to calculate first as per suggestion 2, that how many number of what increase in accommodation prices shall be there and what percentage increase shall be there. Fine, let's begin with this question. Let's first of all evaluate the budgeted profitability. Let's see. Statement showing budgeted profit. Accommodation, restaurant, bar, and total. We are aware that total revenue is 60 lakh, and this is the percentage we are supposed to divide in between. Okay, now let's subtract total variable costs, wages. Okay, this much percentage was provided to us. It was provided in percentage. Then cost of sales, then direct cost, total is we will subtract fixed cost from it, which was provided on next page. So our budgeted profit is there was nothing I need to explain in this part, so I prefer keeping silent and just writing the solution, because just percentage was mentioned and we need to just divide figures into percentage, nothing else more than that. Let us come on to second part. Second part says we need to find in second part 2 nights, that 2 nights something. Let's start with it. See, desired increase in profit or contribution. $17,55,000 into 20%, 3,51,000. As fixed cost is unchanged, desired increase in profit is equal to desired increase in contribution. Gross margin 2-night holiday. Gross margin per 2-night holiday. See, we are aware that fixed cost has not been changed, so whatever our profit is going to increase, that increase is supposed to be done in contribution. Now we are calculating for accommodation, for restaurant and for bar the increase in per night revenue, income, not revenue, so that we can understand that what is our additional margin. Additional revenue for 2 nights, that's why I am multiplying by 2, it will be 500. I am aware of what? That gross margin is 70% of accommodation. So I will directly multiply it by 70%. Figure is 350. Revenue of restaurant is 40%. I was told that revenue of restaurant is 40%, and same goes for bar. Same goes for bar. In restaurant, whatever is our revenue, of that revenue 20% will be our gross margin, and same is the situation for bar. Same is the situation for bar, but here it is 30%, not 20%. Therefore, when we are aware that we are going to earn rupees 450 for 2 nights, and we are aware that this is the amount is 351 is the amount which we are supposed to recover for total 2 nights. So we can arrive at total number of special nights. How come? 351 divided by 450. And number of two-night holidays to be sold per week, 780 divided by 39 weeks, which will be 20. Got it? Third part. In it, we are supposed to calculate increase in price and percentage increase in price. We already know desired increase in contribution is rupees 3,51,000. In part 2 we are aware because of R2. Additional contribution from restaurant $1,57,500. How come? Then additional contribution from bar. $2,77,500 means you will say that ultimately this contribution has been recovered from restaurant, this contribution has been recovered from bar. Now remaining contribution is supposed to be borne by what? Accommodation. 73,500. Desired increase in contribution from accommodation. Therefore, percentage increase in prices of accommodation. %2.72%. Question 5b पे आ गए. Let us come on to question 5b. C. ABC Limited produces 3 products, A, B and C. Okay, this question is ditto copy, word to word copy, means nothing is changed from question 6 of budgeting part 2. Means I have included throughput accounting. You are all aware that TOC has been included in budget part 2. So this is question 6, exactly word to word copy. You will find it, and all of you are aware that I told you several times that theory of constraint is a very important topic, and we cannot ignore it. You can see that in almost every attempt you will find a question from it, and that's an example. Anyhow, let me read this question for you. The following information is available for the period. Contribution per unit, here it is, throughput contribution 30, 25, 15. Machine hours required per unit of production. The machine hours per unit of production has been given. Throughput accounting ratio, better word is machine utilization ratio. Institute wrongly uses throughput accounting ratio word here. And in this this question was, I think, asked in November 8 as well. In that it was written as throughput, throughout, not throughput. Anyhow, estimated sales demand for ABC are 500 units each, and machine capacity is limited to 6,000 hours for each machine. You have been provided that sales for each of these product are 500 and each of these machines capacity is 6,000 hours. Analyze the above information and apply TOC process to remove the constraints. How many units of each products will be made? Let's see. Working note. Let us first of all, or before working note, let's analyze what is our bottleneck. Since machine utilization ratio, which institute uses as throughput accounting ratio, erroneously uses as rather, is highest for machine 2 is highest for machine 2, so machine 2 is the bottleneck factor. Now, keeping this bottleneck as key factor, let us rank the products. Statement showing rankings. Statement showing rankings. Products A, B and C. Throughput contribution per unit 30, 25, 15. Machine 2 hours per unit 15, 3 and 6. Throughput contribution per hour rank. Solution. Statement showing optimum production plan. Statement showing optimum production plan. Products hours per unit, hours utilized, production units. Ranking is B, C, then A. 3 hours, 6 hours, 15 hours. We are aware about this. First, let us produce 500 units of V. It will require 1500 hours. Total hours are 6000. Okay. Then produce 500 units of C. It will require 3000, means still 1500 hours are available to us for product A, and in these 1500 hours I will produce maximum 100 units. So this is the solution. This is the best production plan. Let us come on to question number 6 now. Let us come on to question number 6. This is a simple question of cash budget. Very simple question, although very lengthy to be very frank. And this is very similar to question number 23 of budgeting part 2, because there is nothing as such in this question, just we are supposed to make cash budget. Let us read the information, analyze the information in the working note, and then make the cash budget for the respective months question has asked us. See, from the information given below, prepare a cash budget of the company for first half of 2016. Assuming that cost would remain unchanged, it has been provided that we are supposed to make cash budget for first half of 2016, means January to June 2016, and cost will not be changed. Sales are both on credit and cash. Sales are both on credit and cash. The latter being 1/3 of former, means credit to cash, not this, like this. Later being 1/3, 3 to 1 is the ratio. So if I want to calculate for cash, 1/4 of total sales. Got it? This is 3/4 of total sales. Okay. Realization from debtors are 25% in the month of sale. For example, I do sale of 100 rupees, then 25% will be realized next month. 60% of the following month, 25% in this month out of 100, 25%, 25 rupees will be realized today, 60% next month, and balance in month after that. Okay. Company's policy of selling price is 25% over cost. If my cost is 100, 25 is my this, so selling price will be 125. This will be the policy. Budgeted sales for each month are purchased and paid for the month in the preceding month. Okay. Whatever goods we are planning to sell are purchased as well as paid in just previous month in which we are planning to sell. Rent payable 2000 per month. Sales forecast for the month, different months we have been provided sales forecast for different months. Okay. The company has outstanding debentures of rupees 2 lakh on 1st January. Today you have 2 lakh rupees of debentures carrying 15% per annum payable on last date of each quarter. Interest is 15%, but we are supposed to divide it by 4 because every quarter interest is being paid. 20% of the debentures are due for redemption on 30th June 2016, means 20% means 1/5, means 40, this is 2 lakh, means 40,000 rupees debentures will be redeemed on 30th June. Company has to pay advance tax. Okay. Anticipated office cost for 6 months are this. Okay. Opening cash 1st January का दे रखा है. It has been provided for 1st January. Very simple. Let me begin. Let us first analyze for maximum possible months. If I am not wrong, sales has been started. Sales is provided from October 15. October 15. Okay, I am taking figure in 1000. Then November 15, December 15, January 16, February 16, March 16, April 16, May 16, and last is June 16. Sales 160, 180, 200, 220, 140, 160, 150, 200. I think I missed something. May, June. One more month sale has been provided, and that is July 16. Anyhow, 180, 120. After sales, we need to first segregate into cash sales and credit sales. We are aware that 1/3 of credit sales or 1/4 of total sales. $40, $45, $50, $55, $35, $40, $37.5, $50, $45, $30. We can ignore this figure, obviously 30. If you want to write, you can write, you can ignore as well, because we need for mainly January to that particular month. Credit sales A minus B, 120, 135, 150, 165, 105, 120, 112.5, 150, 135, 90. D. Amount received from debtors. Amount received from debtors. A, for this month's sale, for previous month's sale, for previous to previous month's sale, see, we know 30, sorry, not 30, 25%. This is 25%. Then this is 60%. This is 15%. You are not supposed to write red portion in examination. 30, 72, 18. Here it is 33.75, then 37.5, 41.25, 26.25, 30, 28.125, 37.5, 33.75, 22.5. Here it will be 54, 90, 99, 63, 72, 67.5, 90, 81, 20.25, 22.5, 24.75, 15.75, 18, 16.875, 22.5. Let me write only for January to June. There is no need to write for any other figure, because what we needed was for these months only. Okay. E is cost. We are aware that profit is 1/4 of cost, or we can say cost is equal to 4/5 of selling price. So our selling price was in A, means revenue. Simply multiply it by 4/5. We have been provided that this amount, this cost is being incurred. Just a second, I think I committed some mistake. Yes. We have been provided that this cost is being incurred in the previous month, means purchases was done in the previous month. Amount paid for purchases. Amount paid for purchases. $176. Now let us arrive at solution. Let us write down the solution, main part. Cash budget for first half of 2016. Cash budget for first half of 2016. January, February, March, April, May, June. Opening balance for January is 10,000. We are aware that our receipts are cash sales and from debtors. In working note we have already calculated both of them. Now payments. Starting from purchases, then rent, purchases, rent has been provided as 2,000. Next is quarterly interest on debentures. Which is 7,500. Then redemption of debentures, advance tax, sorry, this is advance tax figure, I wrote it erroneously here. office cost, is closing balance 77,500 here, this will be carry forward here 77,500. So for second month our closing balance becomes 1,10,250, 1,10,250, 44,500, 44,500, 875, 875. Then negative 2125, negative 2125, and last 7,000 negative. Last is 7,000 negative. Let us come on to question number 6b. Let us come on to question number 6b. This question is again from my book, word to word copy. Question 32, transportation. Except in part 3, third part, the word entire supply was used. Although in my book entire supply is not there, except this word, word to word question is same, and that's the only difference between my question, means book question of my book, and this question. Anyhow, let's begin with this question. The following table shows all necessary information on the available supply from each warehouse, the requirement of each market, and unit transportation cost in rupees from each warehouse to each market. Okay, warehouses has been provided, markets has been given, and supply in units. The shipping clerk has worked out following schedule from experience. Means he already told that, for example, A to 2, 12 units, and this way he already told us about how many units shall be transferred from where to where. Required, check if the clerk has made optimal schedule. Means we need to perform optimality test, UV matrix, delta Ig matrix. Find optimum schedule and minimum total shipping cost. Obviously it means in first part solution was not optimum. Anyhow, third part, carrier of route C to 2, means C to 2 at this place, offers to transport entire supply of warehouse C at reduced price. Means warehouse C, for example, these 8 units, whole 8 units will be supplied over this place at reduced price. By how much the rate to be reduced by carrier before the clerk should consider giving him business? Very simple. We will first allocate all 8 units, means no unit will be provided in these 3 cells. All 8 units will be shifted here. Whatever units were there earlier, they will be shifted here. Now total cost will be calculated. Whatever is the total cost, increase in total cost, we will compare that earlier total cost was this, now total cost is this. So this is the extra cost. So our clerk will say to that carrier that if you are ready to pay me this extra cost, I am willing to give you, means if you are ready to give me discount equivalent to this extra cost, I am willing to give you this offer. I am ready to take, means C will transport 8 units to 2. That's the point. But he need to compensate the loss, the extra cost which is being incurred just because all units are shifted to from C to 2 instead of C to other places, just C to 2. Anyhow, let me start with this question 1, 2, 3. Let's start. First part, the shipping clerk has worked out the following schedule as initial solution, Let's see. Market one, two, three, four. Supply, customer ABC 5243 4816 4675 22 15 8 7 12 17 9. Now let's take what is written beneath the table in the question, means what is the optimum solution as per clerk. 12 here, 1 9 7 15 1. Clerk is suggesting this. Now first of all, calculate number of allocations. How many number of allocations are there? Number of allocations are 6. Number of allocations is equal to 6. And what is m plus n minus 1? Number of rows 3, column 4, minus 1 is equal to 6. Since m plus n minus 1 is equal to number of allocations, so it is not a degeneracy situation. Now we will simply proceed for optimality test, means UV matrix and delta IJ matrix. UV matrix. Let's proceed for UV matrix. UI VJ. On the places where we already have allocation, let's write cost of those places. Let us take U1 equal to 0. This will become 2, 4, 3. This will become minus 3. Now, okay, fine. This will become minus 3. On this 4, this will become 3. On this 3, this will become 1. Now we will proceed for delta ij matrix. Delta ij matrix is calculated for unallocated cells, so that we can know that whether we have any cell, unallocated cell with negative delta ij. If there is a negative delta ij, means that cost can be reduced further. How to calculate that? See, 5 minus 0 plus 1. 5 minus 0 plus 1 means 1. 1 is subtracted from 5, so it will become 4. Got it? It will become 4. Same ways go for all unallocated cells. We will do same things for all unallocated cell. 6916 minus 1. Now we can see that there is one negative delta ij, so this solution is not optimum. We will write, since one delta ij is negative, solution is not the optimum solution. Okay. In second part, we were asked to find the optimum solution if this solution is not optimum. Okay. Let's proceed for that. Let's introduce theta number of units in cell having highest negative delta ij. Highest negative delta ij. Here there is only one delta ij, so no issues there. And reallocate the matrix. And reallocate the matrix. Okay. See, here we will introduce theta. It will affect here 9 minus theta and here 1 minus theta. Reason is we cannot change the rim constraints. Reason is simple, we cannot change the rim constraints. Here theta maximum is equal to minimum of 1 minus theta equal to 0, 9 minus theta equal to 0. 1 minus theta equal to 0 and 9 minus theta equal to 0 means 1. You will say our reallocated matrix is five, 4, 4, 2, 8, 6, 4, 1, 7, 3, 6, 5, 12, 7, 2, 15, 22, 15, 8, 7, 12, 17 and 9. 7, 12, 17 and 9. This will be our reallocated matrix. Now optimality test, whether this matrix can be reduced further or not, means it can be further optimized or not. So we will make UV matrix. We will make what? UV matrix of this reallocated matrix. 2, 4, 3, 1, 5, 4. 2, 4, 3, 1, 5, 4. UI Vj. Let U1 equal to 0. This becomes 2, 4, 3 minus 3, 2, 2. Fine. Now delta Ig matrix for unallocated cells. There are several other ways by which we can calculate delta Ij matrix. I already told you those ways, for example making the equations, etc. You can follow those methods as well. There is nothing as such that you shall follow this method only. Anyhow, delta Ij will become 3, 5, 9, 2, 1, 6. I already told you how to calculate delta Ig matrix. So you will say, since all delta Ij's are positive, solution is optimal solution. Solution is optimal solution. And what is that for optimal solution? See, warehouse, market, units, cost per unit, total cost. Fine. Start from this matrix, this reallocated, because this one is optimum. So A22, 12 units, 2 rupee cost, 24. 24. Fine. Just a second. Now A 3, 2 units, 4 cost per unit, 8. A 4, 8, 3, 24. B 3, 15, 1, 15. C 1, 7, 4, 28. C 4, 1, 5, 5. Total is 104. Total is 104. Now let us come to last part, which is third part. In third part, we have been provided, rather I would say that as already told to you, entire supply is supposed to be provided to from C to 2, and C is not supposed to supply anywhere else. Means 7 units will be supplied here, 1 unit will be supplied here. Okay, these 7 and 1 unit will be shifted from C to this place. Got it? Let's write down. If all units from warehouse C are supplied to market 2, reallocation matrix will be See, we have allocated 8 units here. If we allocate 8 units here, means 7 units will not be allocated here now. If we are not allocating 7 units from C to 1, then it means what? 7 units are shifted from C to 2. And same goes for here. C to 4, earlier we were supplying 1 unit, now we will not supply any unit, we will supply all 8 units to 2 from C. Okay. Now let's think about these, take it as it is 7 only. If we introduce 7 units here, let's not think about this 1 unit. If we take 7 units here, then you will say, sir, it will affect at several places. For example, here earlier there were 12 units. 7 units will be subtracted from here, 7 units will be subtracted from 12. 7 units will be subtracted from 12. Okay. And what will happen? We will add 7 units at this place. Earlier there were no units at this place. Now we have added 7 units at this place. Earlier there were no units at this place. You can check earlier allocation. Okay. So this will happen. Okay. Here it is 7. Earlier even at this place there were no units. Just a second, my mouse is stuck. Here it is 7. Okay, we introduced 2 7s here and subtracted 2 7s here. Same goes for this one. We subtracted 1 here, added 1 here, added 1 here and subtracted 1 here. So situation will be something like, instead of this 7, it will be, oh god, it will be 8, it will be 1, 1. So our loop is something like this. There are 2 loops. See, earlier also we made a loop. If you see carefully, while reallocating, I made a loop in this way. Means shifting. Loop means nothing else, shifting of units in this way. And in this situation, we made 2 loops because 2 adjustments are being done. Now, you will say, in simple terms, our table will look like something like this will be our reallocated matrix, final matrix. Our total cost at this situation will be our total cost will be 141. Earlier our total cost was 105. So what we will do, we will show that there is an increase in cost of rupees 37, and for this increase in cost for 8 units, so per unit cost will be something 4 point something. We will say that This 4.63, what is this? Equivalent to minimum discount per unit required by which clerk should consider giving business to carrier of route C to 2. Okay. Let's come on to last question. Question 7a, again a ditto same question, question 29, page 246 of my book, ditto same question. Let's see what this question is all about. A company manufactures two products X and Y. This is budgeting ratio question. Two products are being manufactured. Product X requires 5 hours to produce, while Y requires 10 hours. Okay, standard hours has been provided. Standard hours have been provided. In a month of 25 effective working days of 8 hours a day, 1000 units of X and 600 units of Y were produced. The company employs 50 workers in production department to produce X and Y. Budgeted hours are 1,02,000 for the year. Calculate capacity ratio, activity ratio, efficiency ratio. Also establish their reconciliation, means interrelationship. These are standard hours, budgeted days in a month, budgeted hours, and actual output has been given. You have been provided that actual labor hours are this, and you are also provided yearly budgeted hours. 3 ratios are supposed to be calculated. Let's see how we will calculate them. X, Y. Standard hours per unit 5 and 10 has been given. Actual output was 1600. Then you can obviously calculate standard hours for actual output. By multiplying the two, it will come to 5,000 and this will come to 6,000. Total is obviously 11,000. Actual hours can be calculated very easily. How come? You know 50 workers works 25 effective days. I wrongly said earlier that these were budgeted days, etc. And it has been provided that 8 hours per day was being utilized in the factory. So 10,000 hours was actual hours, Now you know that 1,02,000 hours are your budgeted hours for 1 year. So you can easily arrive at per month's budgeted hour, which are 8,500. You are supposed to calculate three ratios. First is activity ratio, which is also known as volume ratio, if you remember. Means standard hours upon what? Budgeted hours. 11,000 upon 8,500 into 100. As told to you earlier, we are not supposed to write formulas. We can skip formulas. Efficiency ratio. Standard hours upon actual hours. And last is capacity ratio. If you remember in my class, I also told you how to remember these formulas on the basis of variances, overhead variances, fixed overhead variances. Capacity is obviously actual hours upon standard hours. Reconciliation. Means activity ratio shall be a multiplication of capacity ratio and efficiency ratio. Got it? As you already know that now theory portion has been reduced dramatically in examination. In May 16 as well as November 16 we saw very few questions on theory, and these are some example. Last 4 questions, for example, one was of relevant costing, one more question was there, I think 1B, question 1B. Otherwise there are very few questions on theory now. Theory portion has been reduced dramatically. Anyhow, B question 7B is limitation of uniform costing. You can find this on page number 159 on my book. This question was also asked in November 13. Briefly explain the principles associated with synchronous manufacturing. As I already told you, there are 7 principles. I taught you very crisply, clearly, and crystal clear. They were very crystal clear to you, and I told you in class that these are very important, and you can see that they are in examination. Anyhow, you can definitely go through question 5, page 172 of your book. Enumerate uses of Pareto analysis. This question has been asked several times in examination. Question 31 and 33B of miscellaneous theory chapters. Means you can definitely find this question over there. And last, distinguish clearly between skimming pricing policy and penetration pricing policy. Page 118 and page 119 of book 2, miscellaneous theory chapter. You can find this. Means in it you are supposed to write circumstances of in which both of these methods, both of these policies, skimming pricing as well as penetration pricing, shall be applied, and those circumstances will be differences only. So this was your paper. I hope you enjoyed it. For today, it's Tata. Bye bye.